Sometimes a chart looks so exhausted that it almost tells you the whole story before you even start drawing lines. And right now, VRA is exactly that kind of chart. This is SHA, and the coin we are analyzing is VRA. And the structure here is one of those classic heavy downtrends where the levels speak louder than the candles themselves. When a coin spends weeks grinding lower without a single meaningful high or low, you already know buyers are passive, liquidity is thin, and every bounce is being sold into. But even in this kind of environment, there are always key levels that decide whether the trend can attempt a recovery or whether it keeps slipping into fresh lows. VRA is standing exactly at that point. The current price is around 0.030, and on the daily time frame, the chart is still in a clean bearish structure. Every attempt to build a bullish push has been rejected at lower highs, and the market keeps respecting the trend line that has been pressing price down for weeks. There is no meaningful historical support below the current region on the daily, which is why the drop has been sharp and controlled. But what makes it interesting is the reaction we saw at 0.024, where buyers finally stepped in enough to create a temporary bounce. That bounce tells us something important. Even in a downtrend, the market is identifying that zone as a liquidity pocket where price pauses before deciding the next move. Now for VRA to show actual strength instead of temporary green candles, it must break the previous lower high that is sitting around 0.040. This level is not just a resistance but the true break of bearish structure. If the market manages to reclaim that zone and close above it on the daily time frame, then the downtrend will be challenged and a proper reversal can begin. This is where directional traders will start switching bias from bearish to recovery mode, and momentum buyers will step in. Until that happens, every small pump will remain just a relief bounce inside a dominant downtrend. If price keeps failing under 0.040, VRA will continue printing new lows, and the next logical liquidity zone sits around 0.020 or even lower if sentiment weakens. The market has already demonstrated that it can dip aggressively, so patience is needed here. The structure is simple. 0.024 is the bounce area but not a reversal zone yet. 0.040 is the key to unlock upside. Anything in between is just chop inside a bearish phase. As long as VRA stays under the lower high, the coin is vulnerable to forming new lows, and traders should treat every bounce as a retest until proven otherwise. But if the market finally builds strength, holds above 0.024 and gains momentum back toward the resistance level, then we can talk about a potential recovery setup. Stay patient, wait for strength, and if you enjoy these clear breakdowns, I will keep guiding you through every move.